All right, good morning, everyone. Tim Davis coming to you guys with another market review. Today is Sunday, early Sunday morning, November 26, 2023. Um, just finished the Thanksgiving holiday, about to finish the Thanksgiving holiday weekend. Hope everybody enjoyed their Thanksgiving holiday as we head into the end of another month and into the beginning of December and towards the end of the year. And going to start off by showing you guys what the SPXA 200R looks like, which is the tool that tracks the overall pretty much way to track overall market sentiment by looking at the S&P 500 companies that are trading above their 200-day moving average. Okay, that's what this percentage tool shows. And I want to point out some encouragement for the bulls, as well as a pause for cause for the bulls as well. Start off with a pause for cause, and this is a daily chart, this particular tool. And as you can see here, I want to point out a couple of things already, is that while we have seen the market try to get a sustainable rally going here, and one thing I will point out, if I may, okay, that this area up here has been an area where the market has really shown some strong resistance. And overall sentiment shows some strong resistance. That's just below 80%. 80% companies trading above the 200 moving average. So like when we get to this point, we seem to sell off. Back up to this point, sell off. And look what the market is doing. The market is heading up again. The question is do we break above this level here, which is also a level of resistance, which is right around the 55% percentile level. Anywhere between 50 to 55, I normally pay close attention to that because that normally can be the sign of a change of change of momentum in a positive or negative way. And every time we've got to this point so far, a couple times we got to this point, we have reversed and went lower. Jumped above it here, came right back down just below it, and then continued to take off. But a couple times we have hit this point and just collapsed, hit that point and got rejected. Here we hit that point, stayed around it for a little bit, got rejected back down to a level of support. All right, so let me clean this up now. Let's look at some possibilities. So let me get rid of this. So what are some possibilities? Here are some possibilities. So several possibilities here. One thing is we are definitely, if you look at the overall totality of circumstances, we're definitely showing an overbought territory in the near term on this daily chart. You see RSI is well above 70. Or matter of fact, RSI is hitting a level of around 83. That is extremely high on RSI. Normally when we get around those levels for RSI, you see what happens. Sentiment normally pulls back in some way, shape, form, or fashion. 83 is an extreme level. So I do expect to see a near-term pullback. So I do expect to see that. So this week, some kind of way, I don't think we're just going to continue to break through this level here without some kind of pullback first. So I do expect to see some kind of pullback first. Now, with that said, nine times out of 10, let's say at least 80% of the times, when you see gaps in the market, whether it be in a sentiment tool, whether it be in whatever you're looking at, normally eight times more than likely, a lot of times gaps find a way to fill. We just don't know when they fill, but gaps normally do fill. And we see a gap below the percentage action right here, and that would take, and that is right around this 40 level. That would be a significant pullback in this particular tool, but it could find support there. So there was a gap there. I believe that gap eventually is going to fill. On the way down, there was a gap here. Okay, and that gap has recently filled. If you look here, we jumped up, so that gap is filled. There's another gap above action, which is right here. That is above that 55% level. It would take it up to about 60. So I think the more likely scenario in the near term is that we pull back and possibly pull back with an attempt to fill this gap. Okay. So that's something that that we could be looking in store for as we are hitting right around a level of resistance. We could be seeing a pullback around at least to this gap. And then we have to see what happens. If we pull back to this gap, we have to see what happens. Could we find support and rally high and break above this? That is a possibility. So that is one of the possibilities for a positive case for the bulls. Longer term, short term, I think we're going to see some type of pullback. So have to wait and see how that pans out. Now, while we're on this, so I want to draw your attention to a longer term weekly chart. That is where we could see, could be in store for some positivity. Now, if we get that pullback, as I expect we could see in the near term, this is the weekly chart. Look at the TTM squeeze in the weekly chart. It's looking positive. It's looking positive. So if we get a pullback anytime this week, we start to see red bars on the TTM squeeze again, then that could be a negative. But we're right at a level, again, we're right at a level of resistance. Well-defined level of resistance at this with this tool. So right at this level of resistance. This V-shaped type pattern. Okay. Could we see something that we saw similar to, let me get rid of this for a second. Could we see something that we saw similar to this action? We did it here, went up, broke above this level of resistance, and pulled right back below it before we started to travel higher. Could we be in store of something like here? Could we be pulling back to this level of resistance and going higher? That's a huge possibility. But we just have to wait and see how this pans out. Okay. And this is weekly chart, so this could take time, you know, to work itself out. Now, as we approach the end of the year, are we in store for Christmas rally? We have to wait and see. But looking at these daily charts is going to be daily and weekly chart is going to be some key things to pay close attention to, because anything is liable to happen. As we are still technically not out of the woods yet. So again, I do expect some kind of pullback in the near term from this level of resistance. And here is a level of support down here, and this is also a level of support. And the moving average, this is a 10-day prep moving average right here. That's also at level of support. So had to wait and see what happens. We could get a pullback anywhere in this area. We could stop and go higher, but if we do not, we could fail and plunge and go much lower. So that's something I'll be watching over the next couple of weeks. But I do expect we see some kind of pullback from where we are now. But again, there is a glimmer of hope for the bulls if we can pull back to a level of resistance, level of support, and get a rally up. We could run back up to test this level of resistance and break through it. So there's several levels of support we can look at the 10-period moving average. Right here, that's been a strong level of support where we have found ways to rally from before in the past. And this new level of support that was put in there at the bottom of this candle. Excuse me, first I'm dealing with a little bit of a cold. All right, so that's something to pay close attention to. So definitely at a level where we could see some kind of a pullback again by looking at this daily chart. Definitely an oversold territory, overbought territory. I'm sorry, overbought territory. Looking at the RSI, right at a level of resistance. So again, I do expect to see some kind of a pullback here in the near future. Now, let's take a look at the VIX before we start looking at the SPY. Now, just opposite of what we just seen, the VIX is at an extreme oversold level. So again, I do expect some kind of a bounce in the VIX and some kind of a pullback in the overall markets in the near future, due to this, some extreme levels that we are seeing. We are seeing extreme overbought levels in the SPX 200R, which is the sentiment tool, and we're seeing oversold levels in the VIX. And the VIX is right back at a strong level, an area of resistance, and we have broken below the last recent low we had, 1245. We was at 1268. Back around in September, we broke below the level and created a new low. So below that 1240, 1250 level on the VIX. And we are right at an area of extreme overboughtness, should I say. So this area here is considered over the level of support, right at a level of support and oversold territory as well. Look at the RSI. RSI deeply oversold. And what have we seen when RSI has gotten this oversold? We've seen some kind of a rally. So, do we see a rally here? As a possibility, we could see the VIX at least pop this head back above this 10-day moving average, maybe back up to around 15. Okay, so there's something to pay close attention to. Let's take a look at a quick weekly chart of this VIX as well. Here's the weekly chart. As you can see, we're right at this level of support. The RSI is still showing room to the downside, so and the TTM squeeze still showing some weakness. So we could get a short-term rally. Again, the weekly chart, you see this 10-period moving average is still just heading down. We could get a short-term rally right up to that moving average, which would take it right to around 15. And then we can see a pullback and we can see the VIX break below this level. That is a possibility. So that's something to pay close attention to as we head towards the end of this year. If the VIX finds a way to run its head into resistance and pull back again, we can see the VIX really break below this level. And, you know, Christmas rally will be on and popping. But that's something that hasn't played out yet. So we have to wait and see how this pans out. All right, now let's take a look at these ETFs. Look at the SPY first. Again, here's a weekly chart. Butting his head up against a level of resistance. As we see here. Hit the level there before and pull back. Hit the level here before and pull back. That is a weekly chart. And this level that we're at right now, right around 455. So we could see a pullback from this 455 level. And maybe back down to this area first here, which it could take price right around to about 440. So we could see a pullback to around 440 at least on the SPY. So there's something to pay close attention to. Now, if we hit this 440 area or hit this 10-period moving average, we have to wait and see if we get a bounce from there. If we don't, we could run back down to test this level. Okay. So it does have a strong floor underneath it. So just keep that in mind. The SPY right now does have a strong floor where we could see bounces if we come back down to these levels that I just pointed out. Okay, but a breach below this level could be detrimental. So I'll just take a look at near-term daily chart real quick. All right. Again, just like that SPX 200R, we are in extreme overbought territory. Look at the TTM squeeze starting to turn from light blue to dark blue. Look at the RSI well above that 70 level, showing at 81. And look at the price action on the SPY, right at a level of resistance. All right, so again, I do expect to see some kind of pullback here. So we have to see how that pans out. All right, let's jump to diamonds. Same thing, right at a level of resistance. I don't need to join a circle, so you can see that we're right at level of resistance. Look at the RSI still at overbought territory, and every time we reach the overbought territory, we found a way to pull back. We did the same thing back here around July, August, pull back drastically after being in overbought territory. So again, the weekly chart looks the same, right at a level of resistance. Look at the triple Qs. Well-defined level of resistance. And you see the reversal candle already like it's starting to form on this weekly chart. Look at a daily chart here. Again, at a level of resistance, we bounce around here. It's like we're about to pull back. You see the RSI overbought territory. Like we're definitely looking at some type of pullback here in the near future. Let's look at the IWM, which represents the Russell. Same scenario. We've been pretty much been trading sideways in the Russell for quite a bit. So we could be in store for some type of pullback here as well. Again, hovering right around a level of resistance. Hit this candle here and started to pull back. That's the weekly chart. Daily chart. Again, this level, right? This box that we've been trading in, it's like it has been hard to get out of this funk right here. Just let me do that. So again, it's like we could be in store for some type of pullback. And what's interesting with the Russell is you can see that well-defined area of a gap up. So at least a pullback to fill this gap possibly. That would take the Russell right back down to about 170, close to 170. I do have to see what happens from that point. All right, folks. And that is what I wanted to point out as we head towards the end of another month and close to the end of another year. And just for the sake of it, let's glance at crude oil. And as crude oil can be very, very volatile around this time of not only this time of the year, but just around all the circumstances that are going on within the world. Crude oil has been trying to get off the slide, but it just keeps on hitting this 10-per moving average, just keeps on hitting this level and reversing like we are reversing again. But it finds ways to find a way to bounce when it gets down to around this $73 level. So that's something I'm gonna be paying close attention to crude oil. It's been riding this 10-per moving average down. As you can see, every time we hit this 10-per moving average, it's like we find a way to pull back and pull back to some levels of support. We're at a level of support now, as you can see here. We got a bounce here before. And here is another level of support right around here. It's right around 73. So we have to see what happens. We're hitting some level of supports and also hitting levels of resistance. So we're in an area where the crude is just bouncing all over the place. A breach below the $72 level could take it much lower, and a breach above that 70, but a 70, I say 76, 77 level could take it much higher. Here's a weekly chart. One thing you'll see on this weekly chart is we're hovering right around a level of support. And look at these candles. These candles show signs of reversal, folks. these camel setups here, it looks like it shows signs of reversal with these long wicks and then another short wick here. So this weekly chart could be setting up for some kind of reversal to the upside. So we have to wait and see. But the longer term aspect looks like the crude could see a bounce. Longer term, shorter term, we could see some type of stalling around this area. But if we do get a bounce, we could see the crude run all the way back up here towards 80 at least. That is a possibility for crude. And let's take a look at gold. And gold looks starting to look a little strong. So there is a range that gold has been battling with for quite a bit now, since we got back around this 2000 level. So that's a tight range, and if we can get a little bit tighter here. So between this 1950 level to 2000 levels where crude, gold has been bouncing in the near term. We get above this 2000 level in a major way, folks. I say we get above 2024, get above 2020, we can start to see gold really take off and try to test this 2085 level. Okay, look at gold. I mean, it looks really strong. Again, just like the regular markets, we are approaching the level of resistance right around this 2021 level, 2020. And price action is still below, or price action is still above this 10-period moving average, with RSI not in oversold not in overbought territory. Unlike the markets, RSI on the daily chart is not in overbought territory. So we could see a break above this level of resistance. So that's what I'm looking for. 2022, that's the level we want to pay close attention to. As you can see, we reached that 2022 level before, right around here, back in July of this year, and we pulled back from this level. We got around this level here. We pulled back from that level. We are looking like a bull flag here. Looks like we are possibly making a stand. Either we're going to break out above this level, or we're going to pull back. That's what I'm paying attention to with gold. As you can see, it's been hanging around that 2000 level over the past week or two. And with RSI not in overbought territory, we could see a breakout here. So that's something I'm paying attention to with gold. All right, folks, that's all I have for you guys. Hopefully there's some information that you guys can use. Guys, enjoy the rest of your weekend, and I will more than likely try to see you guys next week. So long.